Time for the markets. As I said at the top of the show, Zach Ashmore is in the studio with an epic market report. Zach?
Thanks, Mike. Markets fell last week due to uncertainty in futures. I'm sure you can guess why. That's right, coronavirus. Our go-to excuse that's also the truth. Let's take a look. That's a lot of red. Least affected? Cotton, only down 35 cents. Most affected? Lumber, down $44, continuing last week's slide of $14. Why? Well, according to the Wall Street Journal, lumber rises in spring for building season. COVID-19 has put that on hold. Last week, the USDA released the 2020 prospective plantings and quarterly stocks reports. Try saying that 3 times fast. The planting report predicted more corn acres than last year. The stocks report looked bearish for row crops. Analysts Naomi Bloom, Ted Seifert, Angie Setzer, and Don Rose all say, hold up, let's not get too far ahead of ourselves.
I would say that the report was initially perceived as bearish for corn as far as the bigger acres and a little bit supportive for soybeans and not a lot of big changes for wheat. But I think the report pretty quickly was dismissed by most of trade in terms of acres, just because the data collected was a few weeks old and a lot has changed in the meantime. So I think we probably saw the highest corn number for the spring, and we'll see what the rest of the spring brings on for us.
Yeah, I mean, I'm going to agree with a lot of what Naomi just said. I'd also like to say that 180.5 combined row crop acres would be the highest number we've seen since 2012, or actually higher than 2012. I don't see that happening. And as Naomi said, I think there's been a fairly large shift of about 1.5 million to 2.5 million acres out of soybeans into corn just in the last few weeks. So I think more realistically, in my mind, corn acres could be around 95 million, bean acres around 85 million. As far as quarterly grain stocks was concerned, it was a bit of a bullish number for corn, but now we're getting into a period where we'll see a big drop off in ethanol. So the concern is what happens this quarter.
Yeah, really, I mean, everyone's kind of touched on what I was thinking. Obviously, we are a long way away from having everything into the ground. I think a lot of economics, a lot of other factors have come into play that will make some additional changes. Agree with Naomi that the high side of corn, I think we've seen. And the reality is it's easy to say that we're up significantly versus last year, but I think we really need to go back and compare to 2018, what those intentions look like. But we're also starting the year with moisture similar to what we saw in the 19 when it comes to soil profiles. So that'll have a big impact, I think, over the next few weeks as we move ahead.
Well, I think when you look at it, there was something for everybody in this report. It was bullish on the corn stocks. Realistically, what it really meant is probably last year's yield was understated. So you look forward to this yield with the weather. The acre number was larger than we thought, but probably muted a little bit, some acre switches back. The soybeans, just the opposite. We had a bearish stocks in all positions report, again, probably told us that the acres are probably, or the yield is probably understated last year. Well, the acres number a bit positive. But I think, the bottom line is all those numbers still overall too much grain in the U.S. and the world. And so you come out of the report, you go in negative, you come out negative, and you look at the outside market.
Corn markets, as you've seen, dropped in price. Over $15 this past week. One reason? Ethanol continues to slip in price. Analysts say technicals, the statistical trends of trading activity, are the driving force.
I think it's a combination of the technicals are in control. We are seeing some very strong downtrending markets for corn and soybeans. Fundamentals right now are on the sidelines just because of the fact that the coronavirus is just front and center stage. And fund selling, that's the biggest component right now coming into the market. We've got that money coming out of stocks. It's a new quarter starting April 1st. And so when the funds come into the market, they can be buyers, they can be sellers. Right now, they're sellers.
Technicals, fundamentals. This is a headline-driven market, and it's driven by sentiment. It's driven by what's going on in the world and what's going on with lockdowns and whether we're going to get back to work and start using ethanol, start driving again or not. And what we saw change midweek. We went home at the end of last week thinking, okay, we're going to shut it down for 30 days and then we're going to come back and it's going to be business as usual. And we figured, all right, 30 days isn't going to be that big of a problem. But then somewhere around midweek, when we started seeing things happening again in China, which made us worry that there's a second wave there, it made us really question that what we're doing here in this country, that 30 days is going to be enough. Maybe this is going to go on for a lot longer than that. So that's when the ethanol really came under pressure. You've got plants that are shuttering or really slowing down their production. Bids are dropping. Corn has a domestic demand problem because of the ethanol industry. The longer this goes, the more those ethanol stocks just build and build and build, and it's going to take longer to dig our way out of that. So that's the concern. That's where the pressure came in later on in the week for corn. And really, it's just, when are we going to get back to it? And until stuff like that starts happening again, it's a big uphill battle for ethanol. The thing that could help us would be exports. We look over at China and say, hey, China, which they did buy, last 2 weeks, they've had some nice purchases of corn. Come and buy some ethanol. That would be fantastic. That could help put a Band-Aid on things for a little while. We need something. And until that happens, we're in trouble.
You know, when you look at it, we are the cheapest corn in the world now. And just a few weeks ago, we were expensive. And so we're basically the cheapest, and we should build some demand. Where our exports, we thought were going to be down maybe 100 million, probably just down 50 million now. And I just want to remind everybody that 39% of the demand is ethanol corn use, 39% feed, and about a 10 to 11% on the export front. So, but energy to end the week, Paul, was a positive. We had a good close, and we are biofuel, so it's not all negative at these low prices.
On the cattle side, price fluctuations make an unsure market, like everything else. Mike spoke with Extension Livestock economist Josh Maples, who says producers need to bide their time until things get back to normal.
Josh, what advice would you give to producers?
So right now it is really a waiting game. You know, it's a holding game. You definitely don't want to be forced into making a decision in this kind of environment. You know, I've heard a lot of producers or, you know, more speculators that are saying, hey, you know, this is a time to get in, right? A time to buy when prices are low. And the flip side of that, again, is the uncertainty. You know, if it was such a sure thing, then a lot more people would be doing it, right? And so you know, my advice to producers right now is if you can hold out, try to get us through this crazy uncertainty time. And hopefully come out on the other end with a stronger setting at some point. Now, timing is the question, right? How long does this thing last? Nobody knows. You know, nobody has that answer for how long the current restrictions are going to last. Nobody has the answer for how long the you know, continued overall economic impacts. You know, it's pretty obvious that we're, you know, heading into some level of a recession really quickly if we're not already there. But how long does that thing last? You know, how long is this a long-term recession, or is this a really short-term spike that we can follow up with a really quick recovery? Those are answers that nobody knows the answer to right now. And those are the kind of questions that really impact all agricultural producers because of the importance of the overall, you know, economic setting on the products that we produce.
And that's it for today's epic look at the markets. Volatility is the word of the month, and we're just getting started.